Hello and welcome to This Week in Review with Nigel Farage. Nigel, once again, we're talking all about inflation. It came in hotter than expected in the UK, but more importantly, it actually rose from the previous month, which continues a trend that we've discussed. I think it was 2 weeks ago in Germany and a couple of other places in Europe. What do you make of this latest figure? Is it a blip or are we starting on a new uptrend?
At the risk of boring everybody, inflation is a disease of money caused by governments and is always much longer and more persistent than any experts predict. We've been saying that for 2 years, so there's absolutely no reason to change that tone now. And, Jeremy Hunt's prediction of 2.9% for the end of the year, well, yes, gas prices are lower. Food, of course, is very serious, running at 18%. But, of course, there is monetary inflation as well. And interestingly, what we've seen since, the collapse of Signature and Silicon Valley and the extraordinary bond wipeout of the Credit Suisse holders. I mean, I've never seen anything quite like that. Yeah, equity, all right, you sort of can lose your money, but the way that happened with bonds, and you realize, actually, the Fed in particular, but others, were trying to go for monetary tightening after, 12 or 13 years of just mass printing of money, quantitative easing, all the rest of it. But I think what you've seen in the last week is a significant monetary loosening, and that actually is going to feed into monetary inflation. The banks realize this. The Fed are the sharpest and the most hawkish of all the central banks when it comes to dealing with inflation. And we've seen this all the way through, the last 18 months. They've always moved way ahead of everybody else. The Dow seemed to be very surprised by this move when it happened yesterday. So, yeah, you're a central banker. What do? Do you risk a property mortgage collapse? Do you risk more banking collapses? Or do you let inflation just run away? And, ultimately, inflation is the thing that central banks are judged on. That is the modern paradigm. That is how it works. Now, we've had 10 rate rises in a row from the Bank of England, and that I think that trend's going to continue. Maybe not huge, but I think that trend is going to continue. Huge questions. Absolutely huge questions about the regulatory ability of the Bank of England, the Fed. How is it we seem to go from crisis to crisis to crisis? I mean, I don't want an excessive rule culture, but it does seem to me that modern-day financial market regulation is more about ticking boxes than it is about assessing where big risk is. So it's been a really big turnaround over the course of the last sort of 10 days or so. Inflation is going to stick around for longer than people thought. Rates will stay higher than people thought. And although we've always said that all the way through, and I guess we've seen a sort of renewed interest in gold and crypto. It's funny, isn't it? Bitcoin's up 50% this year. You won't read that in the FT. You will not read that anywhere. And gold had a really big bounce. And kind of, we've said right from the very start, all the advisors that we work with, yourself included, that people should have a very big weighting in gold. And I think that's beginning to bear some real fruit. On the crypto side, all we've ever said is this stuff's not going away. Don't believe all the doom stories. So, yeah, I think in terms of the way that we're looking at things, Nick, I think, we're still very skeptical about equity valuations. We're still bullish gold. And I think everything that's happened in the last 10 days validates that position even more.
The question now is whether it can continue. And one reason to believe that it can is the nature of the predicament the central bankers now find themselves in. And you sort of alluded to it, but let's really dig into it. They've got on the one hand the risk of a banking crisis if they continue.
Well, as I said earlier, the Fed leads the way. There's no doubt everybody, the ECB, the Bank of England, we all play catch up with the Fed, because when the Fed started doing this, the dollar goes up, our inflation goes up. I mean, they sort of exported some of their inflation to us, it seemed to be. And once again, the Fed has moved. And we will follow. Yes, of course, they're going to be worried about mortgage. I mean, mortgage defaults, I guess, will be one of their major worries. Also, the incredible way that, I mean, how can Silicon Valley Bank, having taken this vast amount of deposits, just lob the whole lot in bonds, almost without a care in the world? I mean, it's extraordinary. No, I personally think that the central banks will err on the side of dampening inflation more than worry about the risk of default.
You mentioned that that's still a sort of modern paradigm of central banking, but you were around before inflation targeting became the thing that central banks are most focused on. So take us back to the way things used to be, because I think it is a valid risk or consideration that governments decide to prioritize the banking system over inflation as the central banks used to.
Yeah, it's a funny one, isn't it, really? I mean, the Bank of England, of course, in our case, the Bank of England had been the regulator since 1694. And suddenly Gordon Brown comes along and says, oh, no, these chaps don't know what they're doing. We're going to employ 1,500 failed traders and put them in an apartment block down in Canary Wharf. And what we're now going to do is we're going to give the Bank of England a job that used to be considered to be a political job, namely the rate of inflation. I mean, that's pretty much what happened back in 97, that the Bank of England was actually stripped of many of the responsibilities that it had had before and took an increasingly political role. I mean, it may be ancient history, but I am utterly convinced that Northern Rock would not have happened if the Bank of England had still been regulating banks. I'm absolutely convinced of that. They would have seen what was coming, whereas the tick box bureaucrats never do. So we're in a very odd situation. As I say, the overt politicization of the central banks, and the one measure they're judged by is inflation. It's all very odd, Nick. I mean, just how independent really is the Bank of England? A lot of questions around this. A lot of questions around the appointment of our current governor of the Bank of England. Why did a Brexit government choose to remain governor? Lots of things around it. So as I say, I think the Fed leads the way on all of this. The Fed are the hawks, and we will follow in their wake.
So you're expecting the Bank of England to hike within a few hours of us recording this, it sounds like.
Well, it was incredibly dangerous to sit here and say what's going to happen in 2 hours' time. But I expect there's going to be a quarter point rise. I'd be very surprised if there wasn't.
I'm surprised that central bankers are prioritizing inflation over a banking crisis, given, first of all, I read research from the Reserve Bank of Australia today that the lag on monetary policy is 18 months. Which, for the case of Australia, enough, they started hiking only 12 months ago, the Fed before that, obviously. But the point being that monetary policy is only just started. Everything they've done so far, the impact of it, apart from a system, which is interest rate hikes, decreasing the value of bonds, they don't really know what they're doing. It's like driving a car in the rear.
A pre-1997 Bank of England would have prioritized the well-being of the banking sector and the financial markets. They would have had no hesitation. That had been their job for hundreds of years. It's not their responsibility anymore. It's not their, I mean, it's hard to believe, but it's not their responsibility. That's down to sort of the FCA and the government. We've reversed roles in all of this. When it was really, when you think back on it, it was Clinton, Blair, and Schroeder, the three great globalists who thought they had redesigned the way that economics works with this concept of the third way and everything else. And we've been living with, including selling 400 metric tons of gold at $258 an ounce. And, we've been living with the consequences of this ever since. I personally would like to see that role reversed. I would like to see the Bank of England put back in charge of banking. That is what they should be doing. They're not. And I think we're seeing the consequences of that in just how exposed we are time and time again.
The irony being that the thing that could bring down inflation very far, very fast is the sort of banking crisis they are seeing in the US. So now you've got, the double effect of the banking crisis and all this monetary policy tightening. Do you think there's a risk of going into outright deflation in the next?
Well, it seems a long stretch from where we are now. But if there was to be a real collapse, then of course you'd be back to the 08-09 deflationary pressures. Look, I can't predict. I said this last week. I can't predict where this banking contagion ends, whether we've seen the worst of it, whether there's more to come. Clearly, if we have a disaster and go into a depression, well, yes, of course we'll have the risk of deflationary pressures, and yet, Nick, the response to it will be to print yet more and more and more and more money, which ultimately is inflationary. So no, I stick with the basic premise that we are in inflationary times, and we're going to have to get used to it.